so here we are again, another week, but full disclosure, it's not Friday. It's actually only Wednesday because I had to get this guy in the video. So I have Dean Scaduto back with us this week to talk about rates. So the reason why I wanted to talk to Dean is because recently the Fed increased their rate last week, I believe. Yep. You said it was on Thursday. So in general, I think the general public seems to think that when the Federal Reserve increases their rate or even decreases their rate, that it affects the mortgage rate. So I was hoping that you can kind of explain that, and does it have an impact on the mortgage rates?
Yeah, that is a common misconception, that when the Fed raises their rate, that mortgage rates go up, but that's actually not what happens. The Fed is raising the interbank lending rate, and they did that by 1/4 of a point. And that's what the banks use to send money back and forth. That doesn't raise the mortgage rates. That raises credit card rates, home equity lines. But the regular 30-year mortgage, that is not affected by that rate hike. What that's affected by, mortgage rates, is the trading of stocks and all the investment money going in and out of the market. That's the main movement of mortgage rates. Yeah.
So okay, so if the Fed raises their rate and you want to go buy a car, then that's when it affects you. But if the Fed raises the rate, you need your mortgage to buy your first home, or you're selling and you're buying your next home, that's when it affects you.
That's right.
Okay, so what is the current rate environment for mortgages right now?
Well, right now it's pretty steady. It's not moving a lot. Rates right now are really good. I mean, historical low rates. You can get a mortgage for under 4%, usually in the high 3s. And the movement isn't that great. Right now I call it's like the Trump effect is really what's the movement of the rates. So think of President Trump as a racehorse, okay? When the markets, when the investors bet on President Trump and they like what they're seeing and they put the money on that horse, that's where the money goes. It goes into the markets. When they don't like what they're hearing and they don't want to bet on President Trump, they take the money out of the markets, and that reduces rates. So I call it the Trump effect.
Okay. Well, a lot of people feel like, excuse me, the rates are a little bit higher than what they used to be, but really it's all relative. And we had a meeting earlier today, and I know I experienced this with my mom back in the 80s, mid to early 80s, where she bought a house and it was 13%. So
really high.
The rates are so historically low right now that now is just such a fantastic time to go out and buy your home, right?
It is.
Right?
Rates are awesome, they're low, and it's the first day of summer, so go out, buy a house, take advantage.
Okay, well, we're here at Coldwell Banker Residential Brokerage in Tenafly, and thanks again for watching, and I'll see you next week. And thank you, Debbie, for recording.